Hi everyone, Leigh here from Martinuzzi Property Group with your weekly real estate market update. I hope you're very well. Today I want to share with you some interesting insights that I read in this week's report from Martinuzzi and a few other details as well. Discuss those with you and what it means for us here on the Sunshine Coast. So first of all, Martinuzzi reported this week that the Gold Coast is experiencing a severe housing undersupply, which means that over the next 12 to 24 months, they could see fairly significant increases in property prices due to that shortage. The population projections for the Gold Coast suggest that they will grow to 850,000 residents over the next decade, which is a 23% increase from the current figures. That means that on average, there will be about 20,000 new residents every year, and that means they need about 9,500 new dwellings annually to keep up with that demand. However, current housing approvals and new builds are far below what's actually needed, so that's going to cause that shortage to continue and therefore those prices to rise. So what does this mean for us here on the Sunshine Coast? I believe we'll see similar patterns, especially as we approach the Olympics in 2032. As more people migrate from the southern states to Queensland, we're going to see regional areas grow as well, including the Sunshine Coast. I think many will find the Sunshine Coast a more favourable option than the Gold Coast, and therefore I believe that we might see similar results here over the next 12 to 24 months with property prices still pushing up. So the supply of new and existing homes remains an issue here on the Sunshine Coast. We know that there has been more properties listed in the recent months, but I don't think we're going to have enough to keep up with the demand. On the other front, building approvals are down. They suggested that they were at 1.7% below the previous month. Now, that's not a big concern. It's not a big drop. And if you look back at last year to now, new loan approvals are still up 18% compared to this time last year. So maybe not a cause for alarm. And we might see those loan approvals pick up anyway as we leave winter and come into those spring selling months as well. Interestingly, investors seem to be showing renewed activity despite the high interest rates and the costs of building. If we look at the building costs pre-COVID, since 2021, building costs have gone up significantly, 50% in that time frame. So that means the people in the building sector, and more importantly, those looking to buy and build new homes, are feeling that pressure of those cost increases. And that's probably why I believe we're seeing a lot more demand and good prices for properties that are fully renovated or new homes. And I think that's going to really push more demand into the established housing market over the next 12 to 24 months. So as we approach spring, it's a really good idea now to start planning for your move. So if you are looking to sell this year, maybe it's a good time to seek some guidance. I'd love to come and sit down with you, have a consultation with you, and discuss what you might be able to do to maximize the sales opportunity when you do come time to get those photos and get your property on the market for sale. So click the link below if you're interested in jumping in a consultation with me. I'd love to do that for you. Thanks as always for tuning in this week. Hope you enjoyed this report, and remember to like, comment and subscribe so you can get all the latest insights from me week to week. Have a great day ahead. Talk soon.